Welcome to Business Authority Radio, bringing you insights from today's thought leaders, professionals, and influencers. With your hosts, Neil Howe and Craig Williams.
Hello and welcome to the show. This is your host, Neil Howe, and today my guest is a lawyer from the state of Florida. Now, there are over 100,000 lawyers in the state of Florida, and only less than 1% of those are licensed CPAs as well. And among them, there's only one who is also a former prosecutor, and that is my guest today, Charles Zimmerer. Charles's tax firm helps clients in three areas: retirement planning and charitable giving, tax resolution, and cryptocurrency and Bitcoin tax consulting. He is dedicated to results, and his firm strives to do its best for each and every client. Welcome to the show, Charles Zimmerer.
Thank you for having me.
Well, let's get right to it. Give us a little bit about your background, how you got started in tax law, and also tell us a little bit about your CPA background and also the kind of clients that you help right now.
So in undergrad, I went to Florida Atlantic University in Boca Raton, Florida, and I wanted to go to law school after I graduated. But I always knew I wanted to pursue a profession in accounting and have some type of background. My brother, several of my uncles, and several other family members are certified public accountants in the United States. I think in UK it's chartered accountant. Same thing. But basically I had pursued those courses from about 2000 to about 2006, taking courses at night while working, even as a lawyer. As a prosecutor, in fact, I worked at night to get the CPA. I finally passed it. So I had an interest in it. And I think what most people do who have CPA and also are an attorney, they become tax attorneys.
So interestingly enough, I've got one brother who is a CPA in the UK and another brother who's a CPA in America. So there you go. But so now you say, or in your intro here, that you have three areas of practice really that you help people: retirement planning and charitable giving, tax resolution, and cryptocurrency. Now, cryptocurrency seems to be pretty hot right now. What kind of issues are people having when they're investing in these different cryptocurrencies like Bitcoin?
So the biggest issue is that the cryptocurrency industry, which would include Bitcoin, Litecoin, Ripple, Ether, Ethereum, if you will, all these coins that people are buying, there wasn't a lot of guidance on how they would be treated in the United States for income tax purposes. And I understand this is true in the United Kingdom as well. There wasn't necessarily published guidance or written promulgations. There certainly weren't any direct laws dealing with what Bitcoin is and how it should be taxed. This created a lot of confusion in the industry. And I think the nature of how the industry sort of started in a sense, like out of someone's garage, that started as sort of a project that formed into a financial institution. Take, for example, Coinbase. And you've got a big company now with all these accounts like Coinbase, and those compliance systems had to evolve. They didn't exist like they would be in a Merrill Lynch account. And then sort of after the fact, the IRS decided that, well, we're going to tax it just like it was a Merrill Lynch account in a sense, in sort of a roundabout way. They said, well, it's treated as sort of like it's a security. And then so the industry had to evolve. So the documentation didn't exist. A lot of things didn't exist that would normally be there if you opened a brokerage account. And that's how I equate it in my mind and when I'm talking to people.
Yeah, it really just exploded onto the scene. I don't think anybody was prepared for the growth and the excitement about the whole cryptocurrency industry. But tell us a little bit about the situation. If somebody buys Bitcoin, say they bought it 5 years ago, and all of a sudden it exploded up to $20,000 per coin almost. what kind of tax liability do they have?
The simplest way to think about it is act like it's a stock in your favorite company, like Facebook, except a lot of these people, if they would have bought it 5 years ago, it might not have had a lot of value, or they might have earned the coin through mining, through facilitating transactions in mining transactions, and they earn the coins that way. But either way, the coins would have a very low, it's almost like buying a share of Facebook or Google or something like that for maybe like $1 and then selling it for, obviously it's 10,000. As we're giving this interview, it was as high as 19,000. So you bought something for $1 and had sell it for 19, you've got a gain of $19,000, and it's probably like a long-term capital gain for the person. So you probably get long-term capital gains rates most likely, but there would be on the as if they had purchased it for $1 or $0.
Mm-hmm. So how about people that are actually trading this stuff, that are, really trading daily or, weekly or monthly, that are really, it's going up and down and up and down. How are they taxed in all those earnings or losses that they're making?
So I'd say prior to January 1st, 2018, so the current year we're in, from December 31st, 2017 backwards, a lot of there's substantial authority, and the industry has sort of treated a coin for coin exchange, Bitcoin for Litecoin, Bitcoin for whatever coin, back to Bitcoin, that sort of transaction as sort of a like-kind exchange, meaning they were sort of treating it as if it wasn't really a taxable event. And there's some authority for that. And I've been willing to take that position in some cases. I'd have to actually review the individual circumstance, but it's a reasonable position. But so it wouldn't be a taxable event, but if you turned it from, the industry calls it from crypto to fiat, and by fiat they mean some type of government currency, such as a euro or a pound sterling or a dollar or something like that. That would be an immediate taxable event if you were trading. So you had the like kind exchange available to you prior to 17, but I think under the new Trump tax proposal, under the new tax law, they basically did it so that in 2018, any type of trade wouldn't be eligible for a coin to coin. So it'd be immediately taxable to you. And then it's only real estate can get the like kind exchange anymore.
So what does that mean for cryptocurrency going forward 2018 and beyond? Is this going to be good for traders, or is it going to be something that's negative?
I think a lot of the traders, I think what's happened is that from a lot of them are starting to do their 2017 return right now. So that they had the like kind exchange available to them. Obviously, Bitcoin had a nice little run, and a lot of the coins went up in value. So they had sold some of them, but the tax impact was not going to be that high. That's actually a great question, because I've been thinking about it a lot. So what I think is, when in this current year, in the change year, I think I've talked to a lot of traders and other people in the industry, and they understand that a lot of the transactions that they're doing are going to likely be taxable as short-term capital gains if they're trading, which means you're no longer getting that 15 or 20% tax rate. You're getting it's like ordinary income, like as if you had a job almost. So I think a lot of the people it's like in their mind, but I don't think they're going to really see it until next year. So I think like you're seeing a lot of people trading coins very, very frequently and still trading, but I think the trading's maybe gone down a little bit on an individual trader basis. Maybe they're trading less, but the impact won't be felt until, I would say, April 15th, 2019, which is the due date for the U.S. income tax return. In the U.K., I know they have a different date that's due. So that's when it's going to be felt. But that's a great question, because I think the other thing is you have happening in the industry, I'll just point out briefly, a lot of people are entering the industry. So there may be a lot of trading volume, but I think on the individual trader, if you're a trader, I would say, it's something to consider. And I think you should take stock of it maybe on a month-to-month basis and try and I would just calculate it. What I would do is calculate my estimated taxes based upon my trading volume on at least January or February's month and see where I stood.
So what do you think is the future for cryptocurrencies? Because Bitcoin obviously is the name that most people know about, but there seems to be a lot of others that are really coming on pretty strong. What's the future for cryptocurrency, and why are so many people getting involved with this instead of regular investing?
You ask good questions. That's an excellent question. Obviously, I wouldn't be necessarily the best qualified person to answer that, but I can tell you from my perception and what I've read, you've got people who have said Bitcoin is a fraud. The JP Morgan CEO said flat out it's a fraud, but then he retracted it a little bit. You had Warren Buffett talking about it. There's a whole list of people that have huge names that have said this thing's going to end badly for people. Okay. The second part of that is you have people who have big names, who are hedge fund managers, and people in the industry who have said straight up that this thing's going to go to $40,000 by December 31st, 2018. So, I mean, it could go up, it could go down. So, in essence, that's an interesting question. I think from a tax perspective and a governmental perspective, I can tell you, I talk to lawyers, I talk to people. There's still many, many people who don't have a clue what Bitcoin is. They just don't even get it. They don't even understand what this is. So it's going to be a major, this is a major thing, because as long as Bitcoin has any value, the government's going to be interested in it. That's number one. I think the government's going to want its money. The government wants tax money, and it's entitled to it. So I think the government wants its tax money. The government wants to impose regulations on people transferring it for various public policy reasons, like they don't want money laundering. The government doesn't want people to be defrauded. The government doesn't want criminal activity to occur and bad activity to occur. So the government has an interest in that. So it's going to be tough to regulate it, but definitely there's more governmental scrutiny on it. In addition, there's a huge impact on people's lives. There's people who own Bitcoin and it's part of their divorce. It could be your whole net worth. Mm-hmm. And they don't know how to split it up because the courts don't even know what it is. So how's the court going to say, well, you get 5 Bitcoins, you get 5? The court doesn't even know. So the lawyers don't know. So that's a major situation. The Bitcoin isn't readily accepted, in that sense. It's accepted. It's becoming more accepted, but it's not, you can't walk down the street and buy something with it, just anywhere you want to go. So those are kind of the major factors that I've looked at in determining if Bitcoin is going to have a future and where it's going to go. The utility of the coin, governmental regulation, what the professional firms are doing. There are professional firms making huge investments in not only Bitcoin, but the underlying technology behind it, blockchain, and that sort of idea of the blockchain and how it works. They're doing patents, they're buying it. And I guess the last piece of it is there's going to be a guy named Mike Novogratz, I think is how you pronounce it. He announced he was going to do a Bitcoin bank. So you have major companies that are going to start buying and selling Bitcoin and owning Bitcoin, and people are looking for it to go up in value. But it's not really readily accepted as a currency, but yet Bitcoin is still the most important coin of all the coins because it really is like the US dollar of coins. So that's a long answer. It's a very long answer to that question because it can be a complex question, but it's a huge part of people's lives still.
Well, what I find interesting about the cryptocurrency is that your largest section of investors are people from the ages of 18 to 34, which is a very young crowd that are investing in, a new technology, really, in the cryptocurrency. Is it something that the old heads, like you mentioned, Warren Buffett and JP Morgan Chase, CEO, either not knowing about it, understanding it, and it's the younger people that are, investing and putting their money in it because they understand it? Or do you think the old heads know that it's a bubble and it's about to burst?
I think that like a JP Morgan or a Warren Buffett, if you ask them for purposes of an investment, would I invest my money in something like that, their answer is going to be no 100% of the time, because they're thinking of it from their investment mindset. So because when you buy Bitcoin, you really aren't buying the underlying rights to a company. You're not buying a share of stock in some corporation that has like an operating business or something like that. You're not buying a share in Facebook. You're not buying a share. So you're talking about, to Warren Buffett and JP Morgan, how could they recommend to their clients that they invest in something that isn't really even anything but, a promise of some future type of activity? If you can recall back to the internet bubble, a lot of companies are forming, and we're kind of back there. Maybe something comes out of it, maybe something doesn't. It's very early to tell. But I think the younger crowd and people who are into computers love this stuff, because it's a new technology and relatively new, but I think it's new on the scene. And I think a lot of people like that new way of doing things. And that's what our generation likes doing. They like changing things and doing things that are advanced and, technologically savvy, and just doing an old way with cash. I don't even think anybody even likes cash anymore anyway. So a lot of people don't even like to touch it. But, I think people are into this. I just think that the older generation, it's not an investment worthy product, number one. And number two, they don't understand it. Warren Buffett isn't even going to buy every stock on the street. I mean, he's going to analyze the underlying company and maybe buy the best one or the best two, but they're not going to buy anything that doesn't give them any rights to, an underlying operating business. So I think from their mindset, they're like, no.
Yeah. Well, you definitely have those early adopters, the ones that get in early and, pave the way. And then you have the majority of people jumping in afterwards once it's been established. And that might be the thing with Bitcoin and the cryptocurrencies, although I have seen that it is the charts say that it's following very closely to the .com bubbles, and we know how that ended up. So we'll wait and see. Obviously, there's definitely tax implications for cryptocurrency to think of in 2018. So thank you for your advice on that. Now let's talk about something different. We also talk at your firm. You also do retirement planning and charitable giving. Tell us a little bit about that.
Oh, yeah, sure. And the retirement planning really involves the type of client who is maybe in the last year or the second to last year, they're thinking about retiring, and they're wondering, what moves should I make that is going to be the best from a tax standpoint and from an overall global financial planning standpoint, working with the person's advisor, etc. What is the best tax move I can make? And that's sort of the retirement tax planning aspect. It's very important. And people have accounts that are, because in the United States, typically you'll have an account that would involve like a 401k, they call it, or an IRA. And those are tax deferred accounts, meaning you can trade all day and then they have no tax consequence. But when you take a distribution from the account, it's taxable as ordinary income. There's a strategy on how to take that money out of that account so it's efficient, but you have to consider the person's other income. And then they have accounts that are not tax exempt, or they're basically just regular brokerage accounts that they purchase stock in Facebook, Google, GE, whatever company, it doesn't matter. The company they even worked for. In the case of an NUA transaction, they would have bought their own company employer stock in their 401k. But in any event, that obviously is capital gains. So they may want to consider, well, I'm holding a big position. What's the tax implication? A lot of times their advisors refer them to me, their financial advisor. But sometimes they find me on the internet and they have questions.
Mm-hmm. And we are right in the middle of tax season now, the end of January almost. What kind of problems do you have when you work with tax resolution, where people get into trouble with their taxes somehow? What are some of those problems that people have, and how do you help them?
So in sort of the third area in the tax resolution business, it could be one or two clients. It's a client who's never filed a return. I've represented people who have never filed returns in their life. And helping that person get past that. The compliance problem. Compliance is having your returns filed and done correctly. Tax resolution is attempting to resolve a tax debt with the IRS on terms that are in the best interest of the government, but also, of course, terms that are in the best interest of the client, which we're looking for a resolution there.
So give us an example of that. If somebody's never filed taxes in their whole life, what is the situation there if they get caught or whatever by the government? How do you resolve that?
A lot of the times I have to spend some time with the person because I've had clients who, as an example, I had a client who had never filed in his life, but he was actually out helping other people prepare returns. He just wanted to file so bad. And I think they miss a year. This is just one example of a client, but I'll give you their mindset so you can kind of understand where they're coming from. They miss a year and then they kind of miss a second year. So now they're late on 2 years and they feel like the IRS, if they file, the IRS would actually call them up and say, where are those other years? Could happen. And so it kind of snowballs and they really feel like the IRS is just going to destroy them. They're just going to not, it's like admitting you did something wrong in class. You have to raise your hand in front of everybody and admit you did something wrong and you're a bad boy. And then, you get in all this trouble, right? And so that's kind of how, and the IRS, of course, is very serious. They don't mess around with the debt collection and all that. So, and people know their reputation. It's tough. And, I think assuring those people, kind of convincing them of the route. The other major obstacle that client faces is where do they even begin? How do you even begin to do something like that? Well, I don't know what I did 6 years ago. And a lot of times the clients want to start they don't even know what year to start. How many do I file? Do I file 30 returns? And usually the answer is you need to file six returns. So it's not a magic number. It's just that the IRS, for purposes of determining whether you need whether you want a payment plan or something like that, they call it an installment agreement, you need 6 returns on file, counting the current year. So that's fine. But basically you go back 6 years, but a lot of times you should start I start with the client in the current year, work my way backwards, and we get everything filed and get them an installment. If they can't pay, I try to reduce the penalties. And I handle everything for the client. They don't have to do anything. They never have to face the IRS, and they never have to get in front of the IRS if you have an attorney like me representing you. So I take care of everything. The IRS is not going to call. So that's kind of the process for a non-compliant taxpayer.
So what advice do you give if somebody, for the example that you just gave, they skipped a year or two, or maybe it snowballed into, quite a few years? What steps do they need to take? Is the first step just to call a tax attorney like yourself?
That's right. I would call an attorney. It's worth calling around to, talk to some other people and see what they need to do. Do some online research, see if you can get some good information. But they could just call me. I can tell you the answer. But in any event, contacting someone on how they would proceed, what their recommendations are. And, sometimes it's an individualized analysis. So inevitably the client would have to disclose what their personal situation is. And a lot of clients don't want to do that to a CPA because they don't get attorney-client privilege with a CPA or with an enrolled agent. You get a very limited confidentiality protection. Theoretically, the IRS can subpoena that person and require them to testify against the client. Although the IRS doesn't do that very often, I wouldn't take that risk. But I would say that the best thing to do would be to get into a situation where you could speak with an attorney who is, has some history in dealing with these types of cases, and talk to the attorney and see what the best way to proceed is. And then, another thing I do for the client is I calculate what I think their exposure is. And I use just a rough number of what I think the penalties could be, and the interest. I use about 30% of the tax liability. And then I calculate an estimated tax liability, and then you could proceed on the filing requirements.
So give us an example. I know every case is different and you have to speak to people individually, but give us an example of a client that might pop to your mind. What kind of problems did they come to you with? What were they dealing with? How were you able to help them? And ultimately, what was the resolution? How did you solve that problem for them?
Well, I guess I could merge three clients into one and give you the prospective client who made a fortune in Bitcoin, wanted to give some to charity, but hasn't ever filed a tax return, and corporate stock. And they wanted to do an NUA, so they were retiring. So that's like the ultimate client, obviously. I think the first thing is analyzing. How I would proceed is analyzing. I usually talk to them and just get the lay of the land, their whole situation. But in that particular case, you've got a person who could be non-compliant. They might not have filed their return. So I usually do a little analysis and find out how much they might owe. I also go and verify all the numbers on their return independently and see if I can save them a couple dollars. I usually can if I go back and check it myself. And then that person might want to also do a charitable gift. So they have the first piece, they want to file their return. Before you prepare the return, maybe they want to do a charitable gift in the future for some planning. That involves you want to calculate what their estimated income in the future year would be. You could use the prior year to base it on that. And then do a calculation. This might be the most beneficial gift to charity by determining the amount. Because if you give too much, you might lose the impact of the charitable deduction. If you give too little, you might not be maximizing it. So you want to kind of get an idea how much they'd like to give the charity, and then I maximize it based upon that. Let's say the person also was retiring, and so they would clean up all their returns, get a payment plan if they needed it, talk about the charitable deduction in the future, the charitable giving. Another tax strategy that I deal with often is the net unrealized appreciation. This is if they worked for a corporation and they hold the securities of the corporation that they got as payment for their services or whatever. They acquire the securities, the employer securities, and they hold it in their 401k. There's a special provision in the code. We have to do a calculation to determine if they're a candidate for it, but there's a special provision in the Internal Revenue Code, the law, which says that they can, instead of paying ordinary income tax rates out of their retirement account, they can lower that to capital gains rates. And so I do a calculation to determine if they're a candidate, how much money they would save. And then, I advise the client on how to do that. And then I guess the final piece of it is wrapping it all up and putting it into a report for the client so they know how to proceed and they know all their options.
Well, it is extremely complex when you're dealing with all these different people that want some of your money, the tax liabilities that everybody has depending on, what kind of job they have, what they're investing in, the new stuff like the cryptocurrency. So it is definitely great to not only talk to a tax lawyer like yourself, but also you are a CPA and a former prosecutor. So every angle to cover all these problems and issues that people might have. So Charles, thank you very much for being my guest today on Business Authority Radio. Tell the audience, please, how to best get in touch with you if they have any questions or if they desperately need your services.
Oh, the best way is visit my website, www.cjzfirm.com, and that's Charles John Zimmerer, CJZ Firm as in law firm, one word, cjzfirm.com. And my phone number is there, 786-464-0403. I offer a 15-minute complimentary consultation to find out about the client, but they also could email me through my website or any way that they would like to contact me.
Well, that is great. Lots of information from you today. Really exciting things happening with the cryptocurrency, but there's also a lot to know about the tax implications of that are always changing, and we're not quite sure where it is going. So definitely best to talk to a tax attorney like yourself. So again, Charles Zimmerer, thank you for being my guest on Business Authority Radio.
Thank you.
And to our listening audience, if you like what you hear, hit that like button and share, and we'll see you next time on the show.
You've been listening to Business Authority Radio with Neil Howe and Greg Williams. To learn more about the resources mentioned in today's show or to listen to past episodes, visit businessauthorityradio.com.